Hello and welcome to this January 24th, 2011 video version of InvestEd Central's Anatomy of a Trade. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you this week's Anatomy of a Trade. This presentation is brought to you by StockCharts.com, simply the web's best financial charts. Well, this one's a little strange. Normally, we've been showing successful trades that we've suggested to our members. This one is actually a loss, and we don't want anyone to think that we're unrealistic in believing that every trade we make is going to be a successful trade. So we want to highlight occasionally stocks that don't work out for us, so that folks, I think, start to gain a little bit better understanding as to the importance that we place on exiting positions. I've said before, and this may sound very strange, but I've said before that sometimes the best trades that you can possibly make are ones where you lose money. When you get into a stock and you have the reasons for getting into a stock, when those reasons are no longer valid, then many times, most of the time, it's time to exit. You want to keep losses small when you're trading. I think that's one of the keys. Your losses or your gains don't have to be monstrous, but if you can have decent sized gains, small losses, and then have a reasonable win percentage of those trades, and in my mind, if you're 50%, you should make money in the stock market because your gains should be bigger than the losses you're taking. But if you can get a success hit ratio up to, say, 60%, 70%, 75%, and you stick to your very strict reward to risk strategies, I think you can do very well trading. So let's take a look at this chart. This was Radiant Systems, ticker symbol RADS. When you look at this chart, the first thing that stood out to me when we recommended this or suggested this to our members was the nice volume trends. You can see back in August and September, stock making big breakout after big breakout, each time coming on some very nice volume to the upside. What I look for in an uptrending stock is once I see a low, a lower high, and then a lower low, that pattern ABC, I start thinking inverse head and shoulders. So in this case, I was watching RADS for quite a while. It went down, hit its 20-day moving average bounce, never quite got up to the recent high, went back down again. Notice it came right back through the 50-day moving average, put in the right side of this neckline, and then dropped one more time down here to the 50-day moving average, put in the right shoulder, and then moved back up. It was right about over in here. We were in the middle of this shoulder, and we just suggested, we saw the pattern. It looked very bullish. Of course, it's not confirmed until you get the breakout. But the beauty here is if you make the breakout over 20 1/4, from the head down to the neckline is about $3. So you can tack on $3 and all of a sudden you're up to the 23 1/4 to 23.50 range as your measurement. So if you're getting in below $20, you got a really nice push to the upside available. To the downside, we don't want to lose the shoulder. So the lowest open or close that we had, I believe, was at 1895. So we just said, hey, if we close below 1895, that's our trigger point. That's the area we really need to respect to the downside. Well, the day after we put this out, we put it out on January 2nd, I think, first or second trading day of January, you can see that we broke below. We finished at 1893, took out the right shoulder, and check out what happened to RADS later. Now, I know there's a lot of reasons you could make excuses and say, well, yeah, it was below 1895, but it was only 1893. You could say, well, and the volume wasn't massive. But our point is you can always make excuses for your stocks, and a lot of times what that'll end up doing is costing you more money. We'd rather, if it doesn't do what we're expecting it to do, we'd rather exit, build the cash back up in the account, and then be prepared for the next trading opportunity that arises. The Anatomy of a Trade is designed to communicate the trading style of InvestEd Central. We use technical analysis tools to determine the appropriate timing of entry and exit points on stocks to maximize returns and minimize risks. For more information on the types of services that we offer, please visit our website at www.investedcentral.com. Happy trading.